The earnings of Zoom are out, friends. Zoom has exceeded analysts' expectations for the quarter and issued better than expected guidance. The company called off its planned for $14.7 billion Five9 acquisition during the quarter. Zoom has reported better than expected quarterly earnings on Monday, while warning investors of a revenue slowdown at the video chat company as the pandemic comes to an end. Now, here's how the company did in short. Earnings $1.11 a share adjusted versus 1.09 per share as expected by analysts. Revenue $1.05 billion versus $1.02 billion as expected by analysts, according to Refinitiv. Now, revenue increased 35% from a year earlier in the quarter, which ended October 31, slowing from 54% growth in the prior period. Net income jumped 71% to $340.3 billion, according to a statement release. For the fiscal fourth quarter, Zoom has forecasted adjusted earnings of $1.06 to $1.07 per share on $1.051 billion to $1.053 billion in revenue, which implies a 19% growth. Analysts polled by Refinitiv had expected $1.05 in adjusted earnings per share and $1.02 billion in revenue. Now, Zoom stock has moved swiftly higher last year as the company expanded from a contender in a narrow category of business software to a fabric of culture. Millions of people adopted its software to remotely attend classes, meetings, conferences after the coronavirus pandemic made those types of gatherings difficult, if not impossible. Revenue growth was about 300% as recently as the quarter that ended in January. Now, Zoom has reported its slowest growth since at least 2018 before its 2019 IPO. While Zoom is reckoning with decelerating growth because so many businesses made their purchases last year, the company is expanding its usage within big organizations. It said that over 2,500 customers are spending more than $100,000 a year, up 94% from the same period a year earlier. And the company's Zoom Room software is enjoying growth as the organizations equip conference rooms for meetings with participants who are not on site. The conference room strategy has become even more important than it was pre-pandemic. According to Kelly Stackelberg, Zoom's finance chief, who said on a Zoom call with analysts, you got it right. During the quarter, Zoom has said that it had called off its plan to acquire cloud contact center software provider Five9 for $14.7 billion. In announcing the news, Zoom said that its own cloud contact center software would launch in early 2022. Now, it's hard to know how to re-engage with Five9 around a potential deal at a highly priced because Zoom and Five9 are both public companies, and Eric Yuan, Zoom's founder and CEO, said. But Zoom now has $5.4 billion in cash equivalents, and marketable securities. Yuan said that analysts should reach out if they know any other cool companies that can help them. You know how to beef up our investment on that front, is what he said. Now, prior to after hours move, Zoom shares are down 28% in 2021, while the S&P 500 index is up 25% over the same period. Friends, so Zoom not a great forecast for the next quarter. Okay, yet one can say that the market itself looks to be very overpriced in general. So, friends, expect some reaction on the Zoom stock tomorrow, and of course, the market itself looks particularly vulnerable after 9:45 a.m. tomorrow Eastern Time. So Wall Street may succumb to more selling pressure coming in tomorrow. It's 23rd November 2021. Friends, if you're still not subscribed to my channel, why don't you do so right away? We'd love to have you as a part of a group. And yes, if you would like to be a part of my Premium or Premium Plus Telegram channels where we give you more detailed analysis, then please do email me at globalmoneyinvestor@gmail.com. It's globalmoneyinvestor@gmail.com. Happy investing. Take care. Bye-bye.